What if the government could shut off your bank account instantly without a warrant, without a trial, without even notifying you, and you couldn't buy food, pay rent, or access your life savings until they decided to turn it back on? And what if this power was about to be automated through digital currency that makes financial control as simple as flipping a switch? February 2022, Canada. Truckers protesting COVID vaccine mandates organized a convoy to Ottawa, blocking streets and demanding policy changes. Prime Minister Justin Trudeau invoked the Emergencies Act, used for the first time since it was created in 1988, and gave banks the power to freeze the accounts of protesters and anyone who donated to them without a court order. Over 200 bank accounts were frozen within days. People woke up to find they couldn't access their money, couldn't pay mortgages, couldn't buy groceries. Some had donated $50 to the convoy fundraiser and lost access to their entire life savings. No trial, no due process, just financial shutdown. And this was done with the existing banking system that still requires human decisions and legal paperwork. Now imagine that power automated through central bank digital currencies, CBDCs, where your money is programmable code controlled by central banks and governments, where freezing your account requires no paperwork, just changing a number in a database, where spending restrictions can be written into the currency itself, so you physically cannot spend money on things the government decides you shouldn't. This is the story of how CBDCs give governments unprecedented control over citizens through money supply that can be turned off, restricted, expired, or tracked with one click. Why Canada's trucker freeze was a preview of financial control becoming instant and total. How China's digital yuan already implements social credit restrictions and expiring money. And why every empire in history that controlled currency used it to control populations until the control became so oppressive it triggered collapse. The pattern is clear. When governments control money completely, they control everything, and CBDCs make that control frictionless, instant, and inescapable. Let's start with what CBDCs actually are and why they're fundamentally different from both cash and current digital banking. A central bank digital currency is money issued directly by the central bank, the Federal Reserve in the US, the European Central Bank in Europe, the People's Bank of China, in purely digital form with no physical cash equivalent. This is different from the digital dollars in your bank account now, which are actually private bank liabilities that the bank owes you, backed by reserves at the Fed. With CBDCs, you would have an account directly with the central bank or a wallet controlled by central bank infrastructure, and every transaction would be recorded on a central ledger that the government controls. The critical difference is programmability. CBDC code can include restrictions on what you can buy, where you can spend when the money expires, and under what conditions your wallet gets frozen. China's digital yuan, officially called e-CNY, is the most advanced CBDC implementation and reveals exactly what this looks like in practice. The People's Bank of China has distributed hundreds of millions of dollars in digital yuan through lottery systems to encourage adoption, and the currency includes programmable features that should terrify anyone who values freedom. During trials, some digital yuan was distributed with 14-day expiration dates. Use it within 2 weeks, or it vanishes from your wallet automatically. This isn't a bug, it's a feature designed to prevent saving and force immediate consumption to stimulate the economy. The digital yuan integrates with China's social credit system, meaning low social credit scores can restrict your ability to purchase plane tickets, high-speed rail tickets, or luxury goods. Your money still exists, but the code won't let you spend it on things the government has decided people with low social credit shouldn't access. This is financial control at the protocol level, not police enforcing laws, just code that makes certain transactions impossible. Here's why the Canada trucker situation was a watershed moment that revealed the future of financial control. When Trudeau invoked the Emergencies Act, banks were ordered to freeze accounts of anyone identified as participating in or supporting the protests. This included people who donated through crowdfunding platforms like GoFundMe and GiveSendGo, many of whom donated small amounts, $20, $50, $100, to support what they saw as legitimate political protest. The freezes were done without court orders based on lists provided by police and intelligence services. Chrystia Freeland, Canada's finance minister, explicitly said that banks could freeze accounts without a court order, and that this was necessary to stop the protests. Over 200 accounts were frozen, and the chilling effect was immediate. People stopped donating, supporters withdrew from the protests, and the financial weapon worked exactly as intended to suppress political dissent. The mechanism was still relatively slow because it required banks to manually process freeze orders, required coordination between government agencies and financial institutions, and left paper trails that created accountability. Now imagine this same power implemented through CBDCs. No coordination needed. The central bank flips a switch in the database. No paper trail needed, just a status change from active to frozen in the wallet code. No bank employees needed. Automated systems can freeze wallets based on keywords, geolocation data, or association with flagged individuals. If the trucker convoy happened in a CBDC system, the government could freeze every wallet that sent money to the convoy instantaneously, could prevent any wallet within the protest zone from making purchases to starve protesters out, and could track in real time everyone who attended or supported the protest through their transaction history. This isn't speculation. This is what programmable money enables by design. The Nigeria case study shows what happens when governments try to force CBDC adoption and the population resists. October 2021, Nigeria launched the e-Naira, becoming one of the first countries to deploy a CBDC. Adoption was minimal. Nigerians didn't trust it and didn't see the benefit. So in December 2022 through early 2023, the Central Bank of Nigeria decided to force adoption by withdrawing old Naira notes and limiting cash availability. They announced that certain denominations of physical currency would be invalid after January 31, 2023, and people needed to deposit cash and switch to e-Naira. The result was catastrophic. Banks ran out of cash. ATMs were empty. People couldn't access their money. Riots broke out. Businesses closed because customers had no way to pay. The informal economy, which employs roughly 60% of Nigerian workers who operate on cash, collapsed. People died in riots and in desperate attempts to access banks. A black market for physical cash emerged where people paid premiums of 20 to 30% above face value for actual Naira notes, because cash was more useful than the digital currency the government was pushing. The e-Naira adoption rate after all this chaos and suffering, approximately 0.5%. Nigerians chose economic disruption over government-controlled digital money, and the lesson is clear. When governments try to force CBDCs, populations resist, but the resistance causes immense suffering as the monetary system breaks down. This is the preview of what cashless society controlled through CBDCs looks like: government coercion, economic chaos, and population suffering. The programmability features reveal the totalitarian potential that goes far beyond freezing accounts. The expiring money that China tested isn't theoretical. It's been implemented in pilot programs where stimulus payments distributed in digital yuan had to be spent within 14 days, or the money literally disappeared. Imagine your entire salary was programmable money that expired in 30 days. You couldn't save, couldn't build wealth, couldn't plan for emergencies because money vanishes on schedule. Governments could program money to be unspendable on certain goods, restrict alcohol purchases, restrict gun purchases, restrict ammunition, restrict gasoline, restrict meat consumption for climate reasons, restrict cryptocurrency purchases, restrict cash withdrawals if physical cash still exists. The currency code could include geographic restrictions, money that only works within certain areas to prevent dissidents from fleeing. It could include identity requirements, money that requires biometric verification for every transaction, linking your face or fingerprint to every purchase. The European Central Bank has explicitly discussed CBDCs that would have holding limits. You couldn't hold more than a certain amount of digital euros without penalty, forcing wealth into banks or investments rather than allowing saving in currency. Christine Lagarde, ECB president, stated that digital euro would have control as a feature, and privacy would be limited because complete anonymity enables criminal behavior. This is the framing. Privacy equals crime, and control equals safety. Therefore, financial surveillance and programmable restrictions are necessary and good. The historical precedent proves that governments always use currency control as population control, and it always ends badly. The Soviet Union operated a system where rubles were combined with internal passports, residency permits, and state employment that created near-total financial control. You couldn't move cities without permission. You couldn't access certain stores without proper credentials. Your salary was paid through state banks that knew everything you purchased through the limited retail system. The result wasn't prosperity and order, it was black markets, corruption, economic stagnation, and eventual collapse. The Soviets had to maintain physical cash because complete control was impossible without digital infrastructure. But they tried to control currency as thoroughly as possible with available technology, and the population adapted through informal economies that operated outside state control. CBDCs give governments Soviet-level control aspirations with 21st-century technology that makes the control actually feasible. The Soviet system required massive bureaucracy to track people and money. CBDCs automate the tracking and control, making it cheaper and more effective than anything Stalin could have dreamed of. And we know from Soviet history that total financial control leads not to efficient economy, but to authoritarian state where economic participation requires political compliance. This is the empire economy, where we decode systems operating in plain sight but rarely explained honestly. Central bank digital currencies aren't just modernized money or convenient digital payments. They're programmable control systems that give governments the power to freeze your wealth, restrict your purchases, expire your savings, and track every transaction with one click. Canada's trucker protest in 2022 showed this power in preview when 200 bank accounts were frozen without court orders for political dissent, and it still required coordination between agencies and banks. CBDCs automate this, instant freezing, no paperwork, no accountability, just code that turns your money off when the government decides you're a problem. China's digital yuan already implements expiring money that vanishes in 14 days, social credit integration that restricts purchases based on government-assigned scores, and transaction tracking that creates permanent record of every yuan spent. Nigeria tried to force e-Naira adoption by withdrawing cash and created economic chaos, riots, and a black market for physical currency, because populations instinctively resist total financial control. Programmable money enables restrictions that were impossible with cash. Geographic limits, good limits, time limits, holding limits, identity verification requirements, and automatic wealth confiscation through negative interest rates or forced expiration. This isn't about efficiency or fighting crime. If it was, governments would strengthen privacy protections while improving payment systems. But instead, they're explicitly saying privacy must be eliminated and control must be maximized. Every historical example of government currency control, from Soviet rubles to Roman coin debasement, shows the same pattern. Control concentrates power, enables tyranny, creates black markets, and eventually collapses under its own oppression. CBDCs are that pattern implemented with technology that makes the control total and the escape almost impossible. When your government can turn off your money with one click, you don't have economic freedom. You have the illusion of freedom that lasts exactly as long as you comply with whatever the government demands.